So good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. And we are going to hear from Stallion Uranium CEO Drew Zimmerman. Now, during today's webinar, he will provide an overview and outlook, and then we'll take some questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. So during the Stallion Uranium webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of its corporate presentation. That can be found on the company's website, stallionuranium.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation of buy or sell securities. We note this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on Red Cloud website for specific disclosures on Stallion Uranium. Now, Red Cloud published a uranium sector report last week, rising prices back to moving on supply demand after Q4 government influences. And we also wrote up 34 uranium stocks in the report, including Stallion. So I suggest everybody go out and find that if you can. Red Cloud has a positive short and long-term outlook for nuclear power, given proactive government policies, public acceptance, better economics, climate change impacts, and security of supply. And this positive outlook has resulted in additional uranium demand and higher prices. We saw an evolution of uranium price appreciation drivers through 2023, with consistent price gains earlier in the year due largely to supply and demand and investor buying. Now, price appreciation gained more speed by the third quarter, let's say through September and through fourth quarter. And this started as a realization of stronger than expected demand, but U.S. government support of nuclear power and the Russian uranium import ban really took over, leading to big price jumps later in the year. So ongoing price spikes have continued into 2024. We're hovering around $101 a pound again right now. I think things are more volatile this year in both directions, but I think we're biased to the upside and really due to supply side disruptions. So not all nuclear utilities will receive the uranium they need to keep their operations in reactors in operation. And fortunately, we are starting to see the much needed uranium price incentive. And over the past few years, we have seen similar spot and term prices moving in tandem. However, I think we are seeing a divergence in those prices as spot price moves higher, and hopefully eventually term price will follow. So with that said, why don't I turn the floor over to Drew to speak a little bit about Stallion Uranium.
Perfect. Well, thank you very much for that introduction and overview, Dave. Greatly appreciated. We are very much on the same page as you that we think the uranium price is bullish, not only in the year or two ahead, but long term. And because of that, the incentive price has already moved to over $100 a pound, and we think has the potential to continue to move higher. And that really incentivizes companies like Stallion Uranium that are on the exploration side of the uranium market to bring more pounds to the market. And that's what we're really focused on, finding that next significant discovery in the Athabasca Basin. So in order to fit in with the time schedule that we have here today, I've cut out sort of the broader uranium market parts of our presentation just to focus on the work that we've been doing, because Stallion's been incredibly busy. So we've got a lot of work to go through that we've been working on over the last several weeks. So with that, I'll look through the forward-looking statements, again, available on our website. You can look there. And again, the one thing I will touch on the broader uranium market is the Athabasca Basin. I mean, globally, this is the epicenter of the richest uranium deposits anywhere in the world by a country mile. It's really not even close. So as an exploration company, to be focused here with such a big land package is really a strong advantage. to be able to have established the size of the land package we have is incredibly important. And also in this day and age, the geopolitical factors that go into having this natural endowment in northern Saskatchewan, in Canada, for the reactors in the developed world is incredibly important. And again, we're seeing more news coming with prohibition against Russian sourced or uranium or the fuel cycle out of Russia. Again, so increasing the importance of a deposit in the Athabasca Basin in our mind. So it's a great place to be, and very happy to have built out the land position that we have there. So to get into Stallion, it's always important in the junior space to understand the team behind the company. And our team has had a lot of success in the Athabasca Basin that allows Stallion to have the long-term vision that we do to find that next significant deposit. So not only does our team have success in finding deposits, with Hathor finding the Rough Rider deposit, but also the shareholder value creation, which is always very important for the junior mining space, where they sold Hathor to Rio Tinto in 2012 for $650 million. Some of our significant shareholders also vended in the land assets to NextGen Energy and Atha Energy and remain significant shareholders there. Obviously, significant amount of value creation with NextGen going into development, now a $5 billion market cap. Again, that was an exploration company just over a decade ago. So a significant amount of value that can be created in the basin, and our team has been part of that. We do have Stephen Stanley on our board of advisors. He was the president and CEO of Hathor Exploration. So again, being able to have him available to us is key. The beginning of this year, we also brought on Matt Schwab, one of the earliest employees of NextGen Energy, helped them find the Arrow deposit, and working with our own geo, Darren Slagowski, to really go through our Western Basin projects and find that next big deposit that we're going for. So again, a team of significant success, both in the discovery side of the business and also in shareholder value creation. So when you look at the Athabasca Basin, you can tell it's a very competitive space because it is the best real estate for uranium deposits anywhere in the world. And when you look at this map here, it can be a little busy, but I like that because it highlights how competitive this space is. And when you look at the sort of claims and companies in the eastern side of the basin, you can tell that there's been a lot of uranium work done there, a lot of discoveries there, a lot of deposits and or mines, obviously the two active mines in Cigar Lake and McArthur River of Cameco. But when you look at this map, you see the scale to which Stallion has built out its land position. Now, we are focused in the southwest Athabasca Basin. We think that is where the east was in the early 80s. So it's just the underexplored, sort of newer part of the basin that is coming up. And again, an analog that we like to use is you had, in the late 60s, early 70s, the Key Lake and the Rabbit Lake discoveries in the east side of the basin. And that really, shifted the exploration efforts from the northern side of Lake Athabasca around Uranium City down to the eastern side. And over the next decade, or decade and a half, you had significant discoveries that were added, like Eagle Point, and then stepping into the basin, there was McArthur River and Cigar Lake. So again, when we take that analog and we shift it over to the western side of the basin, you had the Triple R discovery from Fission Uranium and the Arrow deposit from NextGen Uranium in 2012, 2014. And now a decade later, we're taking that step into the basin, looking for that next Cigar Lake, that next McArthur River, again, that next significant uranium deposit. And we think that the time is now. We're doing these sort of new frontier of exploration work that we'll get into and describe a little bit more later. But it's really a vast land package, over 3,000 square kilometers, 750,000 acres, that hasn't effectively been explored. And we've been very busy over the last 13 months doing that early stage and mid stage, and now moving into drilling on that project. So it's incredibly exciting, and we think holds an incredible amount of potential. And one of the key graphics that we really like to highlight, again, going back to that time analog of finding the early stage, a little shallower deposits like they did on the east, and then a decade later stepping into the depths of the basin, where those 5 deposits, 3 of them of Cameco and 2 of them of Denison, have over 1 billion pounds of uranium in them. That's a significant amount of uranium in that 400 to 800, 900 meter depth in the basin. So when we take that view and we go over to the western side of the basin, we can see the earlier discoveries in Triple R and Arrow that were shallower, closer to the surface that were made. And then stepping in, you have the recent high-grade discovery, the JR zone from F3 uranium. But Stallion's land package is really focused in that 300 to 1,000 meter depth, where we think there's that potential to host at least one, if not more, of these significant discoveries that were made on the eastern side of the basin. And it's not that they're not there, the land just has not effectively been explored. And that's what we've set about to change and change in a big way. So getting into the western focus side, you can see our land package here. This is the single largest land package in the southwestern Athabasca Basin. We neighbor NextGen Energy, Cameco, Orano, all the biggest players, a big border that we share with F3 Uranium and their PLN project, obviously home to the recent high-grade discovery there. But it's also important to note that Fission Uranium and NextGen are going into development. And as they go into development, we're going to see over $1 billion worth of infrastructure come into this area as they build out their mines and mills. So that's just a significant wave that we can sort of ride on the back of more happening in this area, more capacity for us to be able to utilize as we advance our exploration efforts as well. So it's an incredibly exciting area. It's the new area of the basin. In the last decade, we've seen over $1 billion worth of shareholder value created here, obviously with the market caps of Fission and NextGen, as well as some of the other work done by PurePoint and F3 Uranium having a significant impact in the area. So again, we're looking at this area as a new up and coming area. And that's why we moved so aggressively over a year ago to get into the southwest side of the basin and build out the largest package that we have there. Obviously, our partnership with Athabasca Energy on a big joint venture project that helps link our 100% owned projects was a key to building the single largest land package there, and are happy to be advancing that project. So for us, it's been all about utilizing all the information that has been gleaned over the last several decades in the Athabasca Basin. We don't have to recreate the exploration wheel. We can really piggyback on the companies that have been exploring here for the last several decades, utilizing what has worked best for them and upgrading it with the newest technology that's available, the newest processing power and modeling that we have available with all of that information that they've shared with the markets. So for us, that starts with a big land package, a regional survey. They're the big helicopter-borne surveys that are going to give you the initial target zones that you want to go after, your conductive trends. So we've now done that over our entire 3,000 square kilometer project package. And then it's taking that and advancing the key target areas into drill readiness. So different surveys that you can do that with to continue to provide more information, to prioritize which targets are going to be the best targets to go after, and then moving those targets toward drill readiness and ultimately drill testing. So that is the roadmap that Stallion's built out to cover such a large land package. And it's a roadmap that we continue to execute on today. So with our Coffer project, it is one of our 100% owned projects. We covered the entire thing with a VTEM survey in 2023. That was the beginning of last year. That gave us several key target areas on Coffer project alone, our Appaloosa target, Clydesdale target, and Mustang target. For us, the Appaloosa target stood out the most as being highly prospective. There's a lot of features there that were highlighted both in historic data and the VTEM data that we were able to compile and model. So we went back and did a on-the-ground advanced time domain survey. So again, part of our strategy, start big with the helicopter, find the area, and do a much more focused, high-resolution survey to better pinpoint where you want your drill targeting to be. But for us, this target gives us, everything that we want to see in a uranium uranium mineralization target zone. So we've got a discrete conductor. We actually have part of the conductor that bifurcates, so it splits into two. That is a key area that we're looking at as well. It has a magnetic low and a gravity low. That tends to mean that there's alteration in the basement rock, which are associated with uranium mineralization. And we're also sort of right along the edge of the Beaver Lodge and Tolston domain here. So that's a big, deep-seated structure that is also important when you're looking for different mineralizing fluids to be coming up. So this target is highly compelling. We've now advanced it to the point where we've announced mobilization of drill crews. So we're in the process right now of building trails out to the drill site. We're going to have a drill that will be kicking off shortly. We'll be able to announce when that drill starts turning, likely at the end of this month, beginning of March. So that's going to be an incredibly exciting time. That's a diamond drill that's going to have 3,300 meters to it, spread across 3 holes. So roughly 1,100 meters per hole, drilling down to a depth. The unconformity is expected to be around the 900 meter range. So it is a little bit deeper, but again, with the new mining methods that are available now, from everything that's been learned at Cigar Lake, from all the work that Denison is doing with in situ recovery, we're really not as afraid of a little bit of depth, because if the deposit is there that we think could potentially be there, obviously it's going to be incredibly economic to be able to go and get it. Right next door, the other key piece of this target area was the Orano and Uranium Energy Company Shea Creek deposit. It's only 13 kilometers away. Our project is only 3 kilometers away from that project. That's 95 million pounds of uranium in the ground at that site. So again, we know this area is incredibly well endowed with uranium, and we've got all the other boxes checked that give this target area significant potential to have a big uranium deposit there. So again, very exciting times for us with the drill turning within a couple of weeks. And again, when you're in the Athabasca Basin as a junior explorer, that drill bit can change things overnight. Our neighbor F3 Uranium, with their recent high-grade discovery in November of 2022, went from a 20 million market cap to 150 million within 3 weeks on the back of that high-grade discovery hole. So significant potential from discovery of the drill bit that we're looking at over the coming couple of months, and an incredibly exciting time for the company to be going into a maiden drill program, and incredibly excited about the opportunity that this target puts forward for us. Another target that we are bringing along is on our Gunter Lake project. Again, another 100% owned project that we covered completely with VTEM in the beginning of 2023. It's a east-west moving conductor, so it sort of moves sub-parallel or against the Patterson Lake trend. That's only less than 50 kilometers to the west side of this project. But again, a key piece for us was in prioritizing this target. It moved across our sort of eastern project boundary line into our Atha joint venture project. So again, very, very helpful that we own the land that this conductor moves over onto. But we were going to be running a project-wide survey over that Atha joint venture ground. So we didn't want to prioritize this one above the Appaloosa target, because we were going to have the ability to come back and look at extended data from the same conductor. So it's a potential target area that we're also very excited about. It's a lot shallower. It's closer to the edge of the Athabasca Basin, but we're still collecting some more data on it, and we'll touch on it a little bit in the next couple of slides with our Atha joint venture survey, because we were able to recover this target with that survey just to have continuity of the data that's coming from the Atha joint venture over onto our 100% owned ground. But again, another very compelling target area that we're looking at on our 100% owned ground and looking to advance it to drill readiness. So again, when we're starting with 3,000 square kilometers, it's not about having one shot on net, so to speak. It's about taking an incredibly large land package and bringing up several key priority target zones for drill testing that we think all have the potential to be, tier 1 targets and absolutely massive uranium deposits in the southwestern Athabasca Basin. Now, we just put news out on our Atha joint venture project on Wednesday morning. That was yesterday. And I can't stress enough how excited our team was with these results. I mean, it was an incredibly large survey. It was the single largest airborne survey done in the southwest Athabasca Basin. Covered over 2,200 square kilometers. I think that's just hard to wrap your head around how big that was. We had 2 helicopters out there for almost 3 months to be able to complete the survey. Almost 12,000 line kilometers of them flying the survey back and forth across this land package. But the most exciting thing about it is the results that we've had. So in building out the land package that we had, it was taking on underexplored ground with the belief that there was going to be significant target areas there. And this rewarded that belief because, as you can see in this data, and we can get into it a little bit more here, you're seeing significant potential target areas sort of spread across this land package that are of very key interest to us. So if you can follow my little map here, we were just talking about the Coyote target, which is right here on our 100% owned ground. And as we can see, it shifted over onto the Atha joint venture as well. So that whole conductive package and corridor is a very prospective target area, obviously significant length to that conductive trend as well. But as you can see, we're seeing multiple areas of very strong conductive trends, the continuation here, up into this area as well here. And these areas here, this is the, in through this, is the extension of the Patterson Lake trend. So obviously the Patterson Lake trend, incredibly well known for these 3 significant deposits that are there. But also here where the Clearwater domain actually sort of comes down along where this is. And the Clearwater domain is an incredibly big feature in the Athabasca Basin. And being on either side of it has high potential. Obviously, we're seeing these 3 large deposits on the south side of the Clearwater domain. And very interesting geologically was the new F3 uranium JR zone is just on the north side of that Clearwater domain. So obviously the potential for it to be a later stage key event that helped with the mobilization and concentration of uranium deposits is big. So some key conductive trends that we'll be following up on around that area. But again, just really focusing in on the fact that this before was an unknown land package. Now we've created a significant amount of value by creating, several what we think are tier 1 targets across this land package that we'll be able to follow up. So again, this was, terabytes of data coming in. So we will be moving into advanced processing, that's 2D and 3D inversions, to get a better understanding of this data and really, focus in on a few of the key target areas that we've already identified, and then judge what will be the best follow-up surveys that we would like to see in order to start advancing more of these targets towards drill readiness. Because as we get them to that stage, it will be in Stallion's best interest to prioritize which ones do get the attention to be, drilled, to have that drill testing. And ultimately for us, it's the odds and the probability of being able to find this next significant discovery that our whole strategy is based on. When we've got 3,000 square kilometers that we've covered effectively with new modern surveys to then focus in on these key target areas and advance those to drill testing, we think that gives us, incredible opportunities to have, some of the best drill targets and new target areas in the southwest side of the Athabasca Basin. So absolutely incredibly excited about the results that we got from this survey. It was a lot of work, but again, I think created a significant amount of value for the company with the high priority targets that we were able to define. So it's been a very, very busy time in the Athabasca Basin for us. If you do subscribe to our news on our website, you can sign up there. You'll see the news flow has been incredibly steady as we just continue to knock this work out one after the other. I mean, we've advanced over 3,000 square kilometers over the last 13 months since we really started digging into the Athabasca Basin. And to be already, mobilizing for a maiden drill program is pretty incredible. So with that, I do want to touch on our two gold assets. They were the assets Stallion had before we moved into the Athabasca Basin. So, an incredible amount of work and effort, and our focus is on the Athabasca Basin, but we still hold these two great assets sort of in our back pocket, so to speak. And we are looking at ways to best see these projects advanced that will benefit our shareholders moving forward. So we're looking at a few different options for that right now. But again, both of these projects, I think, have significant potential in the near term without a large capital outlay from us, because what's happening next door to both of them, and obviously with gold prices just off all-time highs, and we think could move to new all-time highs in the very near term, that would see some excitement come back to the junior gold mining sector and the junior gold exploration sector. So our project in central Idaho, right next to Perpetua Resources, they've announced that the Department of Defense has added another $35 million to them to see their antimony resource sort of move ahead. And that adds to almost another $25 million that the Department of Defense has given to Perpetua. So now at $60 million the Department of Defense has put into that project. We think it gets the go-ahead. They're supposed to get their draft record of decision the first half of this year. Obviously, that being one of the largest independent open pit gold mines in the United States, moving forward would definitely help our project next door. And our Horse Heaven project there is drill ready. We know we have a 2.8 kilometer strike length gold area that's fully permitted, or not fully permitted, but in the permitting process, ready to go with 19 drill pads. So again, having Perpetua move forward with a new mine and mill right next door would make the discovery and build out of any gold on our side become much, much more valuable. So an exciting project and a key piece of value within Stallion. And similar to that story, we're right next door to I-80 Gold in central Nevada. This is right around the town of Eureka. So I-80, when we first optioned this project, hadn't been doing much work and has since, just had unparalleled exploration success, finding more gold and new CRD discoveries. So that's high-grade zinc, lead, and silver. That led them to take over Paycore Minerals in the spring of last year for 105 million Canadian. We've done some more gravity survey or MT survey work at this project that we think shows the geological features that they have on their side sort of come over east onto our side. So some incredible results from I-80. They're looking to build an underground mine and have a big JV partner coming in. They're unnamed at this point. We think when they get named, it will be a large player, very likely to help them move that project forward. That just does that much more to bring value to this district in central Nevada. So again, another key piece of valuation for Stallion that I don't think we're seeing a lot of value in right now, but a key piece for us as we go forward and look for ways to advance those projects. As I touched on the top, a strong team, starting with Darren Slagowski, who we brought on this summer, a decade of experience in the Athabasca Basin, a lot of drilling experience with Pure Point on the Spitfire deposit, so he knows how to operate in the Southwest Basin. Stephen Stanley on our board of advisors, who's taken a company from a junior explorer all the way to a significant exit to a major. Matthew Schwab, one of the early employees of NextGen, knows what he's doing to find these big deposits. So a strong team as we continue to do a lot of work in the Athabasca Basin. Our share structure as it stands right now, we're 123 million shares out. As you can see, we've been under some pressure. Obviously, the whole uranium sector over the past month has been under some pressure. But I think we're an incredibly compelling opportunity right now. And I know, every CEO will say that about their company, but if you go through the amount of work that we've just completed, the potential that our large Atha joint venture project has, and the fact that our drill program is fully financed and about to kick off, and the significant re-rate potential that can come from one drill hole in the Athabasca Basin, I think we're an incredible opportunity right now for investors that are looking for some early stage exploration in the uranium sector to really look hard at Stallion Uranium. I think we've got a lot of levers of value coming down the pipe in the next 6 months and next couple of years. And again, if we can have that big discovery that we think we can, that is a multi-billion-dollar discovery with where uranium prices are right now. So an incredibly exciting time for us, and really looking forward to the work that we have going forward. And with that, I think we can step into some questions.
Great. Okay, thank you very much, Drew. Great presentation. So we are now going to kick off the Q&A portion of the webinar. Reminder to everyone on the line, you can type your questions into the chat box at any time, and we'll get to them when we can. So we already have a few questions here. So I guess I want to start with a comment. That Rough Rider uranium discovery was quite exciting. I remember where I was. It was March 3rd, almost noon. I was in a cab on my way to PDAC. I think it was 2009 or so. So it's nice to see these Hathor guys get back involved in the basin. So.
Absolutely.
Yeah.
And looking for the same sort of thing. I mean, they were one of the highest grades recently when they were discovered, and hoping to do the same.
No, absolutely. So, Stallion is a relatively new basin exploration company. What separates Stallion from many of your peers?
Yeah, I think for us, it's the focus on the Southwest and the opportunity that presents. Again, I think if you were to take our land package and, copy and paste it over top the eastern side of the basin, it would have several hundred drill holes in it. So I think the fact that it's been on the west, that the infrastructure isn't there yet, but is coming to the region, that will allow more exploration. But again, because of that, we were able to step in and build such a large land package. I mean, being able to do that on the east side of the basin just isn't possible. And because of that, we've been able to cover a lot of ground. And I think that ground and the exploration game is all about the probabilities. So when you're looking at 3,000 square kilometers, the probability that we could have one of those deposits under our ground, and now doing the effective and efficient work to be able to find those areas, we think is incredibly compelling. And again, I think important to note that we've done a lot of work in the last 14 months. And now, we're really getting into, the exciting, more advanced stages of exploration that I think the market can really start paying attention to.
Yeah, so you use the word probability. So I see that in two areas here. First of all, infrastructure means that you need to take planes and helicopters into that area. It means boots really haven't been on the ground on a lot of those properties, correct? Or portions of the properties.
Yeah, exactly. Well, I mean, our helicopters have now covered it all. So we've done that stage. And now with the mobilization for our Appaloosa drill target area, we're seeing, the first equipment and boots sort of firmly on the ground as we move into drilling.
Okay. And then also we have the shallow deposits, and we have some deep deposits, but we don't have those mid-depth deposits. So you think really something is missing. They just haven't been found.
Yeah, exactly. And that's why I love that graphic so much. It just sort of highlights sort of the basis of our strategy, that there's been this hole in the southwest side of the basin, and it's not because the uranium's not there. And again, that's a point I really want to drive home. It's just the exploration and effective exploration just hasn't happened over those sort of the 300 to 1,000 meter depths across our land package where we're really focused. So again, the potential and the probability that those are there, again, 5 deposits and a billion pounds of uranium on the east, and not having anything on the west when we know there's just as much uranium mineralization along the edge of the Athabasca Basin in the west, it seems it would be very unlikely that there wouldn't be significant deposits into the basin as there is in the east.
Mm-hmm. How do you go about picking up your land positions? You talked first about a couple 100% owned projects, and then you talked about your Athabasca JV.
Yeah, absolutely. One, I think it's a testament to our team and the networks that we have to be able to reach out and start the process of getting into the Athabasca Basin. For us, that process started over a year and a half ago now with $45 or less uranium prices when we started to look at the Athabasca Basin. And again, it was getting one transaction out of a public company. As we did the due diligence on that, we found a private company that allowed us to create larger contiguous projects. We announced both those at the beginning of 2023, sort of in a 1-2 punch, 6 days apart. And then dealing with Atha Energy before they were even public to say, we've got these large 100% owned projects. We think there's economies of scale that can be created by taking on your Southwest Basin land position and creating the single largest project like we have to better explore it more, again, economically, efficiently, and effectively. And that's what we've done. So we are, as it stands right now, the only company that Atha has partnered with to vend off some of their assets. So that's a 70-30 joint venture that we're working into that we think can be a great partnership. Obviously, Atha's a significant landholder in the Athabasca Basin and soon to be Thelon Basin as well. But again, we are sort of the focused group now in the Southwest Athabasca Basin. So incredibly proud of our whole team that's worked hard to be able to put that land package together. And again, when we were doing this over a year ago, it was a time when we had to act aggressively, and I'm glad we did, because you just wouldn't be able to put together a land package today with the competition just being that much fiercer a year later than what we did when we put it all together.
Yeah, and I'd say that Southwest Athabasca is still home of probably the 3 largest latest discoveries in the basin. So,
yeah, absolutely. And more work. I mean, we just saw NextGen Energy announce a 30,000 meter drill program. They obviously believe there's significant potential in the Southwest Basin. Fission Uranium also doing further exploration work, and then obviously the continuation of all the drilling that F3 is doing on their PLN project as well. So it's definitely an area that's that I like to say is burgeoning. It's up and coming, and I think really just getting started. It's going to be an exciting place in the basin, that's for sure.
Right. I was going to ask this question a little bit later because it's more about Gunter Lake. But, we have seen that success on parallel trends to the Patterson Lake trend. And this one is, Gunter Lake is a parallel trend. I know your targeting geophysics isn't completed there, but are you going to focus on more of the same shallower targets there, or might you get a little bit deeper on that project?
Yeah, I mean, the good thing for us is when we have so much data coming in, we really just try and be pragmatic. We always have our favorites, but really trying to stay away from that and let the data direct us. There's a lot of very interesting features around Gunter Lake. Obviously, on the western side of Gunter Lake, you see more work being done by NextGen on their R7 corridor, which is sort of the other side of Gunter, away from where our Coyote target is. But again, it's following the data, and right now the data breadcrumbs, so to speak, are leading us towards that Coyote target. Again, it's significantly shallower than where we're drilling now. But the other key piece, with that target was that we were going to be flying the mobile MT right next to it. So we actually recovered that whole trend just to have continuity of data with the mobile MT survey. And now, as you can see, it's not just our 100% owned piece of that Coyote target. That Coyote target extends, well across our Atha joint venture. So it's going to be, being pragmatic on where the best drilling is, not just on our 100% owned ground, but across our joint venture project as well, to say, if we're going to drill test, what is, tens of kilometers of conductive corridor, where is the absolute best place to do that? We would love if it was on 100% owned ground. The economics are a little better there. But again, for us, it's if we can find the deposit, that is the game changer. So we're willing to go wherever that data will take us.
Mm-hmm. Okay. Now, how would you describe your first phase of exploration here, your first pass? Because, and this is even before you start targeting drill holes, you've got a lot of land. You need to approach it systematically, help pinpoint where you need to focus, or just as important, what land you want to drop. So I guess what stage in that exploration are you? Are you towards first pass, or are you getting towards drill targeting?
Yeah, no, an important question when you have such a large land package like we do. And we're a little fortunate to be coming at it in two stages. So again, there was about 80,000 hectares of 100% owned ground. We covered that with regional work first, and now just announcing the completion of that regional work on the additional 220,000 hectares. So obviously a significant amount of fresh data coming at us that will take a couple of months to fully process through. Preliminary, we really like what we're seeing. We know there's a lot of key target areas, but it's going to be through that processing period on that at the joint venture project where we're really going to be able to hone in and focus in on the areas that we want to be able to follow up on, and what areas we deem to be not as prospective, or have other sort of incentives to go after other areas first. So with our 100% owned ground, again, we're incredibly fortunate that we were able to highlight several key target areas, some across Coffer, and then the Coyote target on Gunter Lake. It also allowed us to do a transaction on our East Basin assets. So we signed a definitive agreement where we'll have $400,000 and almost 10% of a new company that will see those projects forward with exploration. Again, the east side of the basin was not going to be a focus for us, but having that data from our regional survey and allow another company to sort of take the baton and run with it on those projects is key for us. And again, a good value driver for our shareholders, getting cash coming in the door while still having upside. So we are, looking at different options. We do have a very big land package, but again, our focus is on exploration success in the southwest side of the basin, and being able to kind of continue to move that sort of 1-2 with our 100% owned and the Athabasca joint venture. And again, everything can change with the drill bit. If we have a hit like we think, then that's going to be a key focus for the company. It's going to be a driver of value. It's going to be an area that we have to continue to follow up on. And then you can kind of ask the question of, well, you've got what we think are, at least a handful, if not a baker's dozen of tier 1 targets throughout the rest of the Southwest Basin that maybe are getting, not the amount of love. So there's a lot of optionality with having such a large land package, and that's optionality that I'm very fortunate to have. And especially as this uranium market continues to build, we think the potential of that real estate is only going to grow as well.
Mm-hmm. Okay, you really said decisions can be made on the fly, which sort of led me into my next question. Coffer, that property is close to Shea Creek. Unconformity is about 710 meters deep there, but essentially it hosts 100 million pounds of resources up there. As you said, 3 fairly deep holes. Are you planning on spacing those holes evenly out of along that 3-kilometer conductor? And after you put, say hole 1 or 2 down, and you feel like you've just missed that zone, do you think you pivot and take that 3rd hole and drop it where you think your best chance of hitting is?
Yeah, absolutely. I think you outlined a few very key pieces there. A significant deposit right next door, which we'd be very, very happy to recreate on our side, a few kilometers away. But with the initial drill holes in that sort of 3-kilometer length, and where our gravity lows are, I think, initially we'll be, very interested to see the geology that is coming from the core from even that very first hole. Again, with an underexplored and unexplored land package like this, we don't have any drill holes across this project. So being able to learn a tremendous amount from every drill hole that we have is really going to help the company move forward. So our plan will be to obviously, drill test what we think is the most prospective area right away, be able to learn a lot from that. And even if we've already started the second drill hole, being able to, vector from those first two to be able to place the second is something that we would definitely look to be doing. Again, like you say, sort of exploring on the fly. But when you're willing to be pragmatic with the data that's sort of staring you right in the face, I think that's the best path forward. So it is about a 3-kilometer conductive trend that we're looking at. And originally, I think we're looking at the first hole and second hole likely being in that 500 meter to maybe a kilometer away, depending on what we're seeing in that first hole. Obviously, if there's a lot of alteration but not getting any uranium mineralization, we'd probably stay a little bit closer to it. But then if we again get more data in the second hole, the third one would be sort of driller's choice, I guess, call it that, as they work to find the highest priority for mineralization.
Mm-hmm. Okay. Let the rocks make the decision for you.
Exactly.
Good. Now, the Atha Energy JV, massive land package, who's the operator of that right now? And really, who makes the decisions on what areas to prioritize?
Yes, we are the operator throughout our option. So that option can be up to 5 years, minimum spend of $3.3 million in the first year of exploration credit, I will say. So when we do airborne surveys, we get a multiplier on the hard dollars that we're spending there. So almost through that initial 1 year mark already, even though the agreement was only signed in September of last year. So no risk of not hitting that target, that's for sure. And then once we go into a JV agreement, Stallion will remain the operator and 70% owner of that project moving forward. So essentially, it continues to be our exploration project, and at this stage, just the option, and then we'll have that 30% interest of Atha once we set up a joint venture on that project.
Okay. And do you have the team you need to carry out the field work? And is there any need to expand management at this time?
Yeah, that's something that we're always looking at. Again, being able to utilize Bill as well, our geologist who's down in Idaho, and have him come up into Saskatchewan and lean in. And he's definitely been doing that in a big way, being able to assist Darren, who's obviously got the experience in the basin. And then we're fortunate that, Saskatchewan and Saskatoon is such a hub of uranium exploration. There are, contract geologists that we're already utilizing at this point. And, we like to stay lean and mean for as long as we can. And, if we can have, the variable cost of a contract geo come on and not a salary that goes, 12 months of the year, that's the steps that we're taking right now, is to build out our team that's project specific. And, if we continue to stay busy like we are, then, bringing another geologist or two in-house is likely. And, that will be determined down the road. But again, we have got a lot of work lined up in front of us. So the potential of expanding our team is definitely there.
Okay. And would Stallion consider the acquisition of uranium projects outside the Athabasca?
For us, we have such a large land package already. And such a focus on the Athabasca Basin. That's where we're building out our expertise and our team. That's where we want to stay focused. Now, you could say outside the basin, as in outside the sandstone, could be something we would look at in the Southwest. But the ability, or the desire, I should say, for us to, switch to different geological formations or different countries isn't there. We think, the Athabasca Basin checks all the boxes, the high grade, the size of the discoveries that can be made. And importantly, as we lined out at the beginning, the geopolitical stability that we have in northern Saskatchewan, and the need for the developed nations to have, that safe supply of uranium is very important. So a key reason why we want to stay focused on the Athabasca Basin and specifically the Southwest.
Okay, and with your focus on the basin, would you therefore look at divesting yourself of the gold projects, or would you prefer keeping a stake there, bringing in a partner, and spending other people's money?
Yeah, absolutely. We've been in discussions to see those projects get advanced the best way that we think we can, with creating value for our shareholders. As I outlined, we think there's key catalysts that are outside of our specific projects that can create significant amount of value for them very near term. So whether that is a potential spin out or a potential selling of those assets where we retain some ownership of the company taking them forward, or having an option earn in on those projects where again another company is advancing those projects and giving our shareholders some upside appreciation. I think the core piece to get across is we are focused almost entirely on the Athabasca Basin. That's where our time, our energy, and our capital is going. We have the ability to maintain the gold projects right now for a small number, probably in the 450 to 500,000 Canadian if we wanted to keep them. But again, we do want to see them advance. We don't just want to be sitting on them. So we are in discussions right now that we think would see a lot of value come to our shareholders from those gold assets as again, the gold market continues to look stronger and stronger. And if it breaks out to new all-time highs and starts to go, then that's just another edge of optionality within the Stallion structure right now that I think could be a significant benefit for our shareholders, and working towards that as we speak.
Okay, and maybe just wrap up with a question on Horsehaven and Idaho. Do you see elevated antimony within your gold intercepts like your neighbors have? Is that something? That's obviously a critical element in the U.S.
Yeah, absolutely. So there's no domestic production of antimony in the United States, and that is why Perpetua, I think, is seeing the amount of grants coming from the Department of Defense. I mean, $60 million is not a small figure to see them advance that antimony production. So on our side, we did have anomalous antimony along our main Golden Gate fault zone where we've done most of the work. But our secondary target on that property is actually called Antimony Ridge. It's got a visible high-grade antimony vein that was actually mined back in the war effort, where they, again, cruder mining methods where they just put a bulldozer blade in it and removed, I think it was 40 or 60 rail cars of antimony from that site. So again, we've done some structural mapping and some grab sampling there that not only has high grade gold, I think we had 4.99 gram per ton gold grab samples, but also incredibly high antimony as well, the other critical mineral. So again, yes, antimony would be a key piece of that project. Again, especially if they're going to build out a entire sort of processing facility with Perpetua and the Department of Defense grants that they've been getting, to be able to have that much more ore or concentrate come from our side of the project, just several miles away, would be a key addition to that, and just more of a resource for the United States as a whole that's looking for that domestic antimony production.
Great. Okay, Drew Zimmerman, Stallion Uranium. Thank you for joining us today.
Yeah, thanks for taking the time with me today, Dave. It was great, and look forward to seeing you shortly in PDAC.
Sounds good. It's going to be very, very busy. And thank you everybody else for tuning in. A reminder, the Red Cloud will be back next week when I sit down with the Uranium Explorer ALX Resources. So it's February 26th at 2 p.m. Eastern. And reminder that we have our pre-PDAC conference approaching. That's in person in Toronto, February 29th and March 1st. We expect close to 100 speakers over the 2-day event, including Stallion Uranium and 27 other uranium companies. So during that time, I'm also going to sit down with a conversation with 2 big uranium funds, Guy Keller of Tribeca and Mike Alkin of Sachem Cove will be joining me. So have a great day, everyone, and thank you for supporting Red Cloud's webinar series.